And I also don't think anyone at our level understands what is happening yet. I think there's, um, I mean, there's big players here. There's
David Collum, good morning to you. Happy holidays.
you too. Glad to be here. Always a fun chat.
It is a fun chat. So we had a big event happened about 30 days ago, about a month ago, a little bit longer than a month. Let's just dive into it. Did anything change? Or what's your
Well, we're gonna find out, right? So as you're talking about beforehand, some of the best conversations sometimes precede the podcast. Right? That's a real problem. Um,
I remember is Tom and that
you have to or I have to warn you two things. One is I'm fried. I've been writing and writing and writing. I'm up till 2 a.m. and I've been doing a podcast a day. And so there, I can even get to the point where I go, did I say that earlier in this podcast?
think the scraps.
No, I'm too spontaneous. Everyone looks different. It's like an explosion. They you can't predict them.
Can I give where's the listener some context? So and I were letting it rip right before that, and I was like, I gotta get this on. I gotta get this. So let's just talk like we can and go back 5 minutes.
Right. So, so the current mutation of Dave here is that I'm a little fried. Also, because I've been writing, I've been not paying attention to the last couple weeks, and it's led to some epiphanies. One is that if you take your eye off the ball, for a week, you have to catch the train that's running full speed. And so if you really sort of take pride and really interested in what the world's doing, that week is this big blind spot. It's like a blind spot in your car. And so I've got that blind spot. So 1 minute I'm reading, I'm reading, the next minute I'm not. And then all of a sudden 2 o'clock in the morning, peek at Twitter and Assad has been overthrown and we're bombing Syria. And I go, what? How did that happen so quickly? Right? I didn't even know there was a risk of that. I thought it was a shoo-in to stick around. And then
that was crazy to me, as you just said. I mean, not crazy. Yeah, it was crazy that it happened. That just came out of left field to me. But go ahead.
and I also don't think anyone at our level understands what is happening yet. I think there's there's big players here. There's the Russians, there's the Syrians, of course, there's the Israelis, there's the United States, Turkey, I'm told. And I don't think Turkey just made some decision to get into it without someone saying, now it's your turn to get into it, right? I don't think Turkey makes autonomous calls like that. I stay away from the Gaza Strip and Israel in terms of passing moral judgment as to whether one team is right or the other, but I'll occasionally mention sort of a trying to thread the needle down the middle. I would have to say that Israel is complicating the hell out of the geopolitical world, and I don't know what their master plan is. My writing, the title of it is my annual review, and the title is "What is a Fact." We've reached a point where I don't think there's anything that you could bet your life on knowing at this point, especially anything short of, this is a nickel, that sort of thing. And I'm finding that increasingly frustrating. And so the other thing I realize is if I miss a week and feel like I have to jump on a moving train and catch up, and there's this sort of concept that someone said where they said, you're born into the last chapter of history. Not that there won't be more coming, but this is like jumping into Grey's Anatomy season 27, right? And you don't know the players or anything. You're born into it. And if you really want to catch the thread, you got to go back and watch the reruns. You got to read. You got to find out what happened before you. And you discover things aren't what you thought they were. For example, I wrote a section that emanated from reading about 6 books. That's a revisionist history of World War II. I gave a 20-minute talk at the New Orleans Investment Conference. 20 minutes on the revisionist history of World War II and FDR. How do you do that in 20 minutes? Well, it turns out, best I can tell, the narrative we've been told about, World War II being the United States coming in and, bringing the end to tyranny and stuff is just not correct. And there are historians who are digging into this saying, no, this is not correct. This is not what FDR did. This is not what Stalin did. This is not. And so, so once you dig into stuff like that, you really realize that you're rudderless, and yet you have to pay attention to what happened to the best guys who study markets, right? So one of the problems the modern era investor suffers from is there's almost no one alive who knows what a bad market looks like. We've had a utopian equity market since 1981, and there's of course bumps along the way, but it has never really beaten investors the way a market can beat investors. And there's reasons why. And there's what I think are profound reasons why it will. And so, so we can talk about that later. What's going on in the world?
Well, we can talk about that now if you want. That's interesting.
Whatever you want.
Let's talk about it.
So I am in my bunker of doom. And I first started writing annual reviews because I started in 2009. And it actually started before that, but it was on a chat board where I would just chat with people. And then at the end of the year, I wrote a couple of paragraphs on this is what I'm seeing. And that is what I'm looking forward to, sort of thing. And then one day it got more clicks than normal. And one of the earliest bloggers, Jesse's Cafe American, he said, yeah, I linked it to my blog. And I'm thinking, who reads your blog, Jesse? This is not, no one's going to read your blog, Jesse. Well, it turns out it was a pretty prominent blog. And I wrote about it to find out if my fairly extreme views were hurting me, because I wanted to make sure, I really wanted to analyze, make sure. So it turns out I wrote in a 5-page 2002 email to Rick Sherlin at Goldman Sachs, who's founded their software group. So he's huge. He's a monster in investing world. He was cover Fortune magazine type guy, and he's my roommate in college essentially. And
roommate in college,
fraternity brother. And right, and I've been hearing rumors. I said, Ricky's getting kind of famous. I go, yeah, good thing one of us is. And
that's my kidding.
And he sent me an email. I can't see the email I sent him, but he sent me an email back that says, markets go up and down. What has you particularly jumpy? So I wrote about a 5-page screed on the emerging subprime crisis in May 6, 2002. Now, I wasn't inventing this. I was reading this. I was reading this from guys like Bill Gross and guys like, famous people who were, Josh Rosner was talking about the subprime, emergence of subprime stress in the late 90s. He ended up writing books on it, right? And so I wrote this screed and I said, the banking system's going to collapse. And I said, General Electric is going to collapse. The one thing in there that was prophetically, it's by far my best call of all time. The one thing I got wrong was I thought JP Morgan, with its $41 trillion derivative book at the time, I thought they were going to collapse. And that turned out to be backwards. They were the Borg. They ate everybody, right? So somehow they were too slow to get into the subprime or something.
Or they knew the right people.
They knew the right people, Luongo style, right? And so then I was ready for 2007. And in March of 2007, I said to my class, I have a habit of Tourette's-like outbursts to my class. I was lecturing. I turned around in March of 2007. I turned around and I said, the banking system's about to collapse. What I was watching was a blog by a woman named Santa or Doris Dungy. Some of your listeners will know what I'm talking about. That means they're old bears. And she was posting at Seeking Alpha or something, one of those blogs. And what was happening is the market ABX index, which was the derivative index, which was tooling along at par for years, all of a sudden started tanking. Doris was talking about the chaos underneath the surface in the pipes, and no one else was talking about it. And so by that time, I'd been heavily gold since 99. I had a phenomenal lots. I compounded 13% a year in the knots, right? No one did that, except for maybe JP Morgan. And then actually they didn't. So my cost basis, my gold, it was 270 to 290, right? My silver was below 4. I bought gold at Central Fund of Canada. It was like 17% below now because no one wanted gold, right? So I was buying gold at operationally was probably below the gold low because of that. And I've held every ounce. So it's not exactly Max Kaiser time, but it's done well. And so I saw the thing coming. A friend of mine sent me a letter he sent to his family in 06 or 07, who's a real smart guy. Said, it's now time to get your money out of the banks. I hate to send you this letter, but things are getting bad now. And so then the crisis came, and apparently I knew more than the Fed because they didn't seem to see it coming. If I have a superpower, it's not academia. It's not intellect. I could tell you my grades back to first grade. You'd go, how'd you get here? It just doesn't make sense. It's being tactical. That's what got me here. But the superpower is that in the field of chemistry, I said it was very complicated, and everybody was wrong. Yeah, and so I realized that credential experts who are trying to get it right can be dead wrong. And so when I saw what I would see 12 central bankers all agree, I'd say, no, I think you're fucked up. I don't think you got this one right. And very few people have that capacity. And mine just came from, 30, 40 years of showing people were wrong in a complicated system. And so what I missed was I didn't get back into equities because I thought the market had another halving. So the teens were 4% annualized compared to the noughts 13% annualized. So my
Fleet one, I got a story about all of that. So 2007, I got completely out and I was running a separate business site. And I met with lunch pizza.
Oh, Pizzagate, dude, you're a perv. Okay, I got it.
At Emory University with a gentleman named Aaron Crone of ML Implode. He was running a website, ML Implode.
Oh, yeah. Yeah. Did he get sued?
By a lot of people. And this was 2007, right?
It was the implodometer or something. Was that the implodometer? I watched the implodometer and he got sued.
He got sued by a lot of people.
Because he didn't like the fact that he was announcing the collapse of the banking system.
Exactly. He goes, Andy, it's all going down. And one of my friend was from a really good friend of mine. He was a huge bond trader for ING. Okay. Every day, he and his friends would check out the implodometer. And Implode is CEO is next.
Well, and we watched week after week, three to five banks every Friday would get wrapped up every Friday, like clockwork.
Yeah. And he was like, Andy, take your money out of the banking system. Just what you said. Take your out of the banking system. Good.
So the funny part was the class was a bunch of sophomores. And then I taught senior honors thesis research 2 years later in February of 2009.
Okay.
March, January, February, the class started. It's a 1 hour a week, a one evening sort of lecture a week where guest speakers and stuff. And the first day, I said to the class, it's the same kids, the chem majors, they're now seniors. I said, didn't I tell you the banking system was going to collapse? Because it was collapsing. And they said, yes. And I said, did any of your econ professors take? Because it's a common double major. And they go, no. And I said, what are those assholes paid for? And so my first guest lecturer for chem honors thesis research was a guy who cut his teeth on mortgage-backed securities and who had been up until 2006 the CEO of Morgan Stanley Bank, the banking subsidiary. He's my first guest lecturer. And I got the most amazing compliment I've ever gotten, I think. I've got some good ones, thankfully. I appreciate it, guys. My inner narcissist likes it. He stands up in front of the class and said, we were just at dinner. And I realized within 15 minutes, I was not the smartest guy at the table.
The chemistry teacher is.
And then when he was done, I threw up about, 10 plots showing the catastrophe. And I said to him, he got this wrong, actually. I said, 10 years from now, is this a distant memory? Or is New York look like Detroit? And he says, New York looks like Detroit. This was in 2009. So in early 2009, it was really the bottom. It really was the bottom. So what no one saw on the planet, my opinion is no one saw it. And people say, oh, I saw it. I go, what did you say? They go, I said they do anything they have to. I go, that's not seeing it. To say that is a nothing burger. No one saw $30 trillion coming, right? When 30 billion got used to save Bear Stearns, not save them, to swallow them, that took the oxygen out of the room. When 700 billion was set up to just save the whole system, that was mind-boggling. They put 30 trillion in by the end of that crisis. So the banking system was put on complete life support. I would argue it has been on life support the whole way. Yeah, I would agree with you. And so I think the banking system is now, they've probably patched some holes in the banking system, but the pressures will appear elsewhere. This is like a mall that you've tried to close all the doors and you're pressurizing the mall. Yeah. And you're just waiting to see which of those doors is going to blow open. And I don't think you know, but the amount of leverage in the system, the amount of, so the market it's the biggest bubble in history, in my opinion. Mm-hmm. What scares me is that it doesn't have the euphoric flavor. So obviously based on speculation in the markets, you call that a euphoria, but it doesn't have the euphorias of past where, like the Nifty 50, when transistors and stuff had been invented, and then the .com, where it really felt like the world had changed, and then the mortgage one. The markets weren't as crazy as the mortgage world was, right? But everyone was getting a house that they had never dreamed they would be able to get, and you could see how great, the 125% mortgages. It was so obvious that this was going to blow the hell up. Right. But everyone was euphoric over the fact they could upgrade their house and they could get a house. And so there was a euphoria with that one. This one is a euphoria in which no one wants to talk to their neighbor because they're still pissed at them for not vaccinating or voting for Trump. You can't have polite dinner conversation without stumbling into a bouncing Betty and turning into a shit show. People are generally mad. I've been struggling with trying to get my passport renewed online, and I've tried to upload my photo something like 11 times, and it keeps rejecting it on ridiculous technicalities. And it's just the world is so irritating now. And if this is the top, what's the bottom going to look like?
That is a great point.
Scares me.
Golly, is that scary? So that really sets up the whole next thing. It's like, okay, where do we go from here? And we just had an election. We don't know what's going to change
Let me
scenarios.
let me preface that with the thumbnail sketch bull bear case. The bull from 1981. And I probably said this on the last time we were here, but you probably have senile listeners who don't remember. Yeah, I can hide my own Easter eggs now. So, the bull case, the bull started in 81. So 1981, the market valuations were at rock bottom. Now, I have discovered, doing podcasts, you go, why do you do them? Well, first of all, I like to talk to guys like you are smart. Second of all, it's like a comedian who does the comedy circuit, the clubs. He's testing material. He's working through ideas, trying to figure out what works, what doesn't, what gets pushed back. That's what our podcasts are.
Go ahead. But yeah, it really is.
So what I've discovered is people don't understand valuations. So they think you're talking market price. And I don't know. No, a valuation is the market divided by something the market ought to correlate with. It is inherently, if it's worth anything, the numerator is the price of the market. The denominator is something that it should track and is inherently susceptible to the same inflationary pressures. So price to earnings, price to GDP, price to revenues, you can't take a market valuation and change it through inflation if it's a good valuation metric, because both are inflating. So in 1981, the markets were priced at PE of 6. I don't like PE because we've learned how to fake those so badly. You want to hear a shocker? I repeated it this year. I wrote about it a couple years ago. You dig into the triple Qs, the Ps reported in the mid-20s. You dig into the Russell 2000, same thing. You go, it's maybe now 30, right? It turns out if you look at the prospectus, I didn't do it, but Horizon Kinetics did, and Mark Hulbert did for the Russell 2000. And you look at how they calculate the valuation. They average them. If the valuation is over 40 for the triple Q, they round it down to 40. If there are no earnings, they assign it 40. So the upper limit on the triple Q valuation as described in the prospectus is 40. So you buy an index thinking you're getting, you're thinking you're buying something that's priced to return. If you're I got a PE of 25. You're priced to earn 4%. That's the earnings. That's the cash flow. You buy a bond, PE ratio is the yield.
Right.
Now, you say, oh, but it's a growth stock. I go, okay, fine. Fine, it's a growth stock. Now, when you buy something with a PE of 25, first of all, you're praying that the earnings hold up, right? And they don't have to. You have recessions and stuff. Let's assume they do. You're buying a cash flow of 4%. And if they want to use it to buy back the shares, which I really don't like at all, because usually you're buying back an overpriced share. So they're taking, and the question is, why did that happen? And the answer is because the Fed kept rates so low for so long that if you kept that money on your balance sheet, you earn zero. Whereas if the rates were 12%, you go, fuck it, let's stockpile cash. Right. So the price of capital fucked up the whole system and caused companies to not only buy back their shares, but to take on debt to buy back their shares. And of course, options owners, CEOs, love that story. And so they say they return the capital to investors. They're lying to you. They're returning the capital to people who are no longer investors.
Yeah,
right. Well, anyway, so the PE, when you do it correctly, both Hulbert and Horizon Connect, Johnny Murray Stahl runs it, very smart guy. I'm going to give them some money in the next serious downturn to manage. Now though, and you create it like a big Berkshire, and you just say, look, here are all the earnings and losses, and here are all the market caps summed together into it's not even a big Berkshire. Well, it is actually. The PEs are around 100. So you are buying a cash flow of 1%. No, Right. So now you say, okay, but their growth taxes said, okay, double your earnings, not through inflation, not nominal, because don't forget, inflation doesn't influence the valuation. And you're trying to say, how do I get out of this valuation trap I'm stuck in? So you double your earnings organically. You double your fucking earnings. Really, you create wealth. You double your wealth creation. You're now priced to earn 2%.
Right.
Do it again, you're priced to earn 4%. Do it again, you're priced to earn 8%. I did this math in the late 90s on eBay, which then said to me, this .com thing's fucked up. And so I realized that people don't understand this idea that you're purchasing a revenue flow, no matter what you do. And that at some point, there will come a time you have to pay the piper. So 1981, PE ratio 6, your price to earn 16%, something like that. Cash flow, now inflation was bad, which is why people were pretty pessimistic. We've been through a bear market that if you inflation adjust, and if someone doesn't inflation adjust, they should have their PhDs removed. That over the last 14 years had fried investors with a 75% correction. So at the end of 14 years, 75%, not only is 75% bad, 75% tomorrow is bad. 75% from now until the year 2038 is real bad.
Yeah.
Because you're now an old man. You're now, peeing 10 times a night, getting your prostate removed and shit like that. You're not an investor anymore. And so the PE was dirt cheap. China entered the world from their Middle Ages. They were desperate for capital, and they therefore sold their goods and services for pennies an hour. Russia needed capital. They hadn't collapsed yet. The Soviet Union hadn't collapsed, but they were collapsing. They needed capital. So they let us help them get resources out of the ground. So all that was really super disinflationary. And as Buffett said in his 99 article that everyone should read so many times that you finally understand it, bear and bull markets, secular ones, are all about interest rates, period. QED. It's not about GDP. It's not about wealth creation. Nothing. It's interest rates, long-term rates. If over some number of years, if not decades, the rates are going up, you're screwed. If the rates are going down, own those risk assets. Well, the rates were 16%? And over the next couple of decades, over the next 40 years, they went down until recently, 0. Negative in Europe, right? And it looks like they almost knew that they could methodically march those rates down. It looks almost linear after the first dip, right? Yep. It looks like someone marched them down to me. I don't know. Is that conspiracy? Yeah, probably. They realized they could milk the cow for quite a few decades, I think. So then, so you have the tailwind of demographics. Guys entered the boomers entered the workforce. How old were you? You were a twinkle in your parents' eye almost. Right? You were 10 years old. You're just learning to choke the chicken. And the boomers entered the workforce, and they brought their wives with them this time. So the demographics were phenomenal. And economists who I say out of one side of my face, they're idiots. And the other side, I then use what they say when it serves my purposes. We'll tell you demographics are profoundly important. We happen to be entering a demographic slump globally. So that's a problem. So in any event, and during this period with these tailwinds, valuations, which should flop around based on our opinions and inflation going up, valuations going down, that sort of thing, but they shouldn't trend. Unless you want to say that the amount of cash flow you earn from investing trends, but I don't think it does. I think it'll, and if people say, well, it'll never get cheap again, I go, there's never been a market in the history of markets that didn't eventually find its way to cheap. Not a single one. Not a one. And there never will be, because that's what a market is. So over that 40 some odd year period, the valuations compounded at 4% a year. Now, what happens in the next 40 years when they compound at negative 4%? You go, oh, that'll never happen. I just said it. Markets will find a way from going profoundly overvalued to profoundly undervalued at some point. So here's the math. We're sitting at, let's take the Case-Shiller index, which is as good as any. I follow like 25. They all tell the same story unless it's put out by a Wall Street bank. Then they tell a different story. Case-Shiller index was 6 or 7 or something at the time. Historical average, in which I define as from 1880 to 1990, the last 3 decades screwed that average up so much that I say, okay, there's your baseline. And then it launched from there, right? It took off. So let's use 1880, 90, 110 years. If that's not if that's not a baseline, I don't know what to tell you. It averaged around 12. It's sitting at 38. Let's call that 200% over fair value. Okay, so now what do we got going forward? Let's say that we block and tackle our way out of this. There's no way, you can't inflate out, right? You can't inflate out. The valuation does not change with inflation. The attitude about the impact of inflation causing you to sell shit or buy shit will change the valuation. But then you can inflate away a valuation problem. If you block and tackle and you assume GDP is going to grow 2.5% a year, which turns out to be above the 20th century. Howard Marks puts it at 2, others put it at 2.2, call it 2.5. If you want to say, oh, it's going to be much bigger, I go, we're kind of an ailing empire. That's a reach. The 20th century was pretty goddamn good. I think if the 21st century is as good as the 20th, we probably would call that a win. I'd sign off on that bet. I'd sign off on that deal if they offered it to me. If the GDP grows at 2.5% and the market treads water in terms of the valuation, inflation adjusted, the market goes nowhere. It just trades around the same price, the real inflation price. It will take 45 years to block and tackle our way out of this.
5 years.
Or we do it the more normal way, and that is it gets its ass kicked. Now, Here's the deal. If you drop 60 or 70%, who's going to show up? The dip buyers. 60 or 70% gets you to historical average value, gets you to historical average return, which, by the way, Buffett said, if you don't account for valuation, is 4%, not more. I've got other people who can show the same thing. 8% is not the goddamn number. It's 4%. And so you're back at historical fair value or historical, I'll say fair value because I can't, it's a historical statement, but what's fair about it? I don't know. If you drop 60 or 70%, you're now at historical average value, means you're at a valuation that will return 4% over time, over infinite time. So what you can't do is get a V bounce, or you've simply undone the correction. A correction, those two things. It drops the price markedly. When someone says a 5% correction, I go, you got your head up your ass. So 5% isn't a correction. A correction is when you get on black ice and that car starts wildly going around. Bottom line is, if you have to correct the valuation, and it has to come back, or you haven't corrected it, right? If you have a tumor and you cut out 3/4 of it and it grows back, did you fix it?
No, it's still here.
So it's not a correction. And guys like Tom McClellan, who I really like a lot, says, look, a correction is to find ads just to counter trend, blah, 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 whatever. And I go, the word correction implies correcting, fixing, adjusting in some way that solves a problem. So if we have a correction, I think the monetary policy, which I think was bad, and the 40 some odd years of tailwinds profoundly, created what I call the era of the V bounce. So every dip, and you can call the .com drop a dip. You can call the Asian flu a dip, because it finds its way back, and every single time, if I just held on, I would have been fine. Well, it's 4% compounding over 45 years. You have huge, huge risk. And the risk is really existential at this point, I think. So that's the bear case. So I think I'm in a bunker of doom, and nothing is going to get me to come out of this. And by the way, when the market's dropping, guys like Stoufferly and Mark Valek, they've in their annual report or semi-annual report or whatever, I read it whenever it comes out. They show what happens in post top to various asset classes, and they all get crushed. Because you're selling everything. You're selling your children. You're selling your car. You need cash. You need it now.
Right.
And so when you see something where some guys I respect say, look, small caps have never been this cheap. Forget Holbert's P of 100, by the way. Have never been this cheap relative to large caps. And I go, are they cheap? And I'm not convinced.
Yeah.
Because their ratio includes NVIDIA.
Right. So relative.
Tesla, the Mag 7. Here's the question I asked rhetorically in my writing. I said, do you think the chapter entitled The Magnificent Seven is going to be a success story when it's written? I don't think so. I think it's going to go nifty50.com's Mag 7, housing
Right.
Mag 7. I think NVIDIA is going to do a swan dive. Jensen seems to have a problem with truthiness. He's vendor financing, just like Global Crossing did. He looks like Enron to me. I think the AI thing is going to change the world. How many stocks out there still have the .com ending on them?
That's
Amazon, which Amazon's almost lost the .com, right? It's got a .com because it's the website. It's in the website. But if you say how did Amazon do? CNBC talked about Amazon. They don't say Amazon.com anymore. It's not eBay.com. Everyone's adding .coms to their names to get more market. Right? They were adding .com. You could say, cannabis.com. You get the stock would run. That's how crazy it was. It's like NFTs. So I think we're looking at a horrible next 40 years, and hopefully time is duration, as some people call it. So sophisticated investors often talk about the risk of duration. They're really saying you're going to be dead before this is fixed. That's what the duration means. And so I think that it's going to be a widowmaker. I think you say, well, boomers can't afford it. I go, that's exactly why it's going to happen. I think. So once the selling starts, first you get the panic where you're going, oh, I am Joe Schmo. Fidelity says if you retire at 65, you should have 8 annual salaries in the bank. That's only if you want to live for 8 years. If you want to live for 30, you better have a lot more than 8.
Yeah, right.
I mean, that's just stupid advice. That's just ridiculous advice. I think you ought to have the number of annual salaries saved that's the same number of years that you think you want to live before starving to death. And so this is my bear case. The question is, what would knock me off it? And the answer is not Trump. The reason is because I meant to say this in a podcast yesterday, Luongo, where he was talking about how things would change so much, and he seemed euphoric. The question I would ask you, since I didn't ask Tom, is let's say Trump goes in and really shakes up the system. I, by the way, think the GDP numbers are wrong because the inflation numbers are wrong. And if inflation's off by 3%, then we've been in a recession for a while. And you go, well, that can't be. You go, well, the British Empire was in recession for decades. So yes, it can. But let's say the GDP grows because Trump does. And I'm really excited about Trump. This is not me hammering Trump. I'm excited about Trump. The euphoria was not expected. First of all, I thought it'd be a shit show.
Yeah, me too.
The massacre was a clear message. And it means get the DEI shit out of our face. Get all that shit out of our face. You have fire Rachel Maddow, right? There's a lot more than just who's in the White House. Right. But so how big a GDP would be? Let's say the GDP is 2.5. How big a GDP do you think someone like Trump could generate if he really sent Musk in and did a hatchet job on the government? Let's start with FEMA, $21 billion of worthless government, right? Now, you got to give them a severance package. You can't just throw them in the street because these guys at FEMA have to get trained to bag groceries. They're not employable. Right. And so then the question is, what kind of GDP growth could you expect? Would the GDP growth either would be as optimistic if you were to say, winner take all? What's the upper optimistic bet on U.S.'s GDP going forward in the event that Trump somehow shakes the system? It's going to take a while for the shakeout to occur, but where could the GDP get to? We're a pretty big aged country. What would be we're some little banana republic in Indonesia?
Yeah. Are you asking me?
Yeah.
So this would be my answer. I don't
know.
I think this is gaming this out, and I'm all for cutting a lot of weights. I am there. But that's deflationary, correct?
I know.
You're going to have contraction.
I know. Those are consumers. Those are not resilient consumers who just got fired.
Exactly. So,
which, by the way, the consumers now are not resilient, just for the record.
Right.
I think the economy's a mess.
Oh, it's a mess. I'm agreeing with
But that's not what they say. That's not what they say.
No.
They lie. Here's my shock face.
Right. But that would be my answer to you. I don't know how much you can add. I think over time, if a lot of stuff is cut, that's a net positive, hugeness.
Let's say 10 years from now. Let's say 10 years from now.
Let's
say he does it. What would be a good GDP? What would you say is a good GDP?
I would say 3%.
Okay. That means to grow out of 200% over valuation, it'll only take about 35 years.
Right. That's the pessimism why I don't take a lot of this.
But it's pessimism. That's realism.
That's realism.
That's fourth grade math.
Yes.
That's where you take the PE. That's where you take the number. You take 1.04, which is the 4%, which is the 1.04, and you ask what power does it go to get to 200%. And it's all big power. So the compounding required in the GDP is spectacular. So I think it's 1.025 to the 45th power gets you to 3, which is 200% overvalued, which a lot of people don't even know that math, right? If you're up 3x, you're up 200%. You're not up 300%.
So
we can't get out of this one without getting our ass kicked.
Right. Yeah. And that has really profound implications on, is there going to be change? Because it's way too painful, number one.
Well, there will be, because we don't get to just get off the train. There will be change of some kind. But the change, I think we have to wake up in a pile of vomit under a bridge before we change. I think this is where the alcoholic says, okay, I'm going to check myself into a clinic. And I think to get there, we're going to have to get massacred.
Okay.
Because we keep thinking we can print our way out.
Right.
Inflation doesn't get you out of overvaluation. It just hurts you. Because, they say inflation's same. What do you think the real inflation number is? You had to guess. Everyone has their own. So if I don't have a mortgage, I have a different inflation number than if I do, things like that.
A good John Williams thesis. I'm going to add,
Or Chapwood.
I'll add 8% onto whatever state, which is about 3% right now. So we're at least 11%. That's what I would do.
Okay. All you need is 3% above the stated number for us to be in recession.
Yeah.
In recession for years.
Yeah.
And if you say, oh, no, we had 1 year where it grew 7%, I go, I'm not letting you off the hook because of 1 year. Or for 20 fucking years, 19 of them, we've been below zero. I'm calling that a 20-year recession. 2 quarters of contraction, whatever. That's for CNBC. Yeah. So I think that's too high, maybe.
Okay.
I was on a panel discussion with Jimmy Iorio and Bookfire and stuff, and they seem to sincerely believe that the numbers are lower than that.
11%.
Then yeah, but at the same time, look at your car insurance. And I collected a whole bunch of anecdotal, as I explicitly say, anecdotes don't make a number, right? But it was designed to trigger people to think about, oh yeah, this went up, and to think about it. Then you got stupid stuff. I hammer the protocols by which they calculate inflation, and to my luck, Peter St. Onge and E.J. Antoni did the same thing, and oddly highly complementary, meaning we looked at different aspects. So I gelled the two together. They look at the hidden inflationary costs of regulation, being a bunch of libertarians. Biden put in something like $1.8 trillion of estimated added costs of regulation.
Oh, I believe it.
Easily.
Yeah, easy. Well, anecdotally, I look at my grocery bill literally.
Oh, that's
30%.
Well, is it year over year 30%, or is it just now high? See, that's where we're now up there. We can't afford being up there,
right?
Or we're climbing. My question: do you think it's still climbing?
I don't know. This is what I know. I will tell you, 18 months to 24 months ago, I have a family of 7. We were paying between $500 and $600 a week.
Yeah. You're using the rhythm method, aren't you?
Yeah. Yes.
You must have a hot wife, I'm telling you.
She is. But $500 to $600 a week.
I'm looking for her behind you. Why are you? Don't worry about it.
$500 to $600 a week on groceries. Anecdotally, I am paying now $700 plus, $700 to $750 a week on groceries.
Right.
The math.
So I ask guys like the guys who run diners, and Jimmy Iorio, who owns a restaurant, so he really knows his inputs. And he seemed to suggest that while it had climbed massively, which was undermeasured by a country mile, but now it seems to have stabilized. Now that couldn't be because we're about to get our ass kicked, right? That could be the inflation is now being dealt with by the fact that the consumer, used up their COVID money, used up their credit card, used up private debt. That's something people talk about occasionally. If you want to have nightmares, you start listening to Mike Green's narratives on passive investing. And at first I thought Mike was doing a shallow analysis. I said, oh yeah, fine, whatever. But over time, I got more and more respectful of Mike because there are subtleties and nuances to the passive flows that he knows that I don't. And he is now, he thinks the passive flows might be turning over. And here's the problem with the passive flows. On the way up, the passive flows created a buyer, just relentless buyer. And who are the sellers? Who's going to buy the sales on the way down? So, and that includes the boomers getting out, includes people who have to sell because now all of a sudden they're having trouble making their mortgage payments, whatever. Who are going to be the buyers? The shorts are gone. So shorts serve the important purpose of rounding out the tops. At the peaks, the shorts are selling, getting their ass kicked, but they're selling. The bottoms are covering their shorts, and so they're the buyers. So they serve and they also find criminals, the good ones. Some guy's naked short, and they should be shot. But Chanos discovers Enron, things like that. They serve a purpose in the system. They're gone. Yeah. They don't exist. Yeah, they've been destroyed. Anyone who shorted the bad boys in this market is dead.
Yeah. Let me ask you this then, because this presents an interesting situation for the Fed. It presents an interesting situation for the Fed as well as the dollar. And I usually I don't want to say I don't like, but I find analysis of the dollar flawed.
So do I.
Because it's relative to a bunch of other.
Yeah. That's the ratio problem.
Exactly.
It's a piece of shit. It's the nicest piece of shit in the sewer.
Right. Exactly. So,
but I keep finding a better metaphor. I keep groping for a better metaphor than the what's the one that everyone uses? The I don't know.
So the Fed's in a box, no? I mean, tell me about that. I mean, okay, so the economy's in the toilet. Stock valuations are sky high.
And the Fed no longer can relentlessly drop rates because inflation is sitting there it's the bear. You go outside the box, the bear of inflation is sitting there waiting. It's in the DNA. It is reverse transcribed into the DNA. That's a nice metaphor, isn't it?
Right.
It is now real. And the Fed is to blame. So what could the Fed have done? Well, for starters, they could have opened their mouths and say, look, guys, you got a bunch of drunken sailors inside the Beltway. Stop. They always used to say, oh, we need fiscal help. They're telling the drunken sailors to spend money.
Yep.
They deserve scorn for that.
Yes.
They should be saying, look, you are living beyond your means. Get a grip. But so the Fed has one mandate that's real and two that are fake. The real one is just to maintain a stable currency, which they've utterly failed to do. Although it hasn't been a catastrophic rot, it has been a slow rot. It's just getting stale steadily. The second is a mandate that they put on themselves, best I can tell, and that's to optimize the economy, which is their way of saying that we're going to do pump and dump shit. And then the third is to fund the swamp.
Yep.
And they are probably going to fund the swamp.
Right. So that really leads me to, and I think this should be the wrap up. It's like, there's so much talk, there's so much corruption. Where does it end, and game that out for me? Because not only do you have it, we talked about the Fed, we talked about bubbles, and now you got everything, pun intended, blowing up internationally.
Or
now. What's that?
I can't make a case for why Assad should have been run out of town. The guy wore a suit, for Christ's sakes. He wasn't wearing some turban. He wasn't, right? We've been trying to get Assad for decades. And I have not been able to figure out why. We fake gas attacks, everything like that. So our deep state.
And Hamas is not in control, I read. They're now in control. Or
so here's the question. Did we know they would do that? Right? Afghan fallout. I've got a pretty good network now. was on a Zoom call with a Army intelligence guy, and I asked about the Afghan pullout. And I said, was the chaos intentional? He said, yes. He said it was just, and I said, because it was so embarrassing, right? If you took your 5 kids and said, okay, we're going to spend the evening, we're going to come up with a plan to pull out of Afghanistan, and we're going to send it to the Pentagon, it would have been better. Because your kids would have figured out right away that you pull out the civilians first. Not right. Didn't it look like it was going to be, this is the 4-dimensional chess problem. It looked like it was going to be Iran hostage crisis 2.0 on steroids. Because Jen Psaki said we got 90% out. And I go, that's a good score in a calculus test. It's not a good score for getting Americans out of a very dangerous part of the world. And then we pull out. And then, the press said, oh, the Afghan army will take charge, and the CIA had to know that was a farce. For one thing, because we were paying them. Once we stopped paying them, there was no army. So there was that. The CIA had to know it was going to collapse immediately. We left pallets of money. We left weapons. Yeah. It seems to be almost impossible to imagine that wasn't an orchestrated deal where we said something to the effect, look, here's the deal. See, we could have put all the weapons in the middle of a field, dropped them all, wiped them all out. Boom, done. Right. My guess is we said, look, we got to get out of Afghanistan because we're about to pick a fight over in Ukraine. People don't know this yet, but we are. And so here's the deal. We're going to leave you weapons, you Taliban types. We're going to leave you money to pay for ammo, food, whatever. Do not make us come back. There were no dead Americans after we left.
Yeah.
So the deal was cut. And then we moved all of our attention over to Ukraine, and then Russia had to attack Ukraine. I'm 100% of the belief, 99%, let's put an error bar on it, that the Ukrainian war is NATO's fault.
Yeah, I would agree with you.
And that war didn't have to occur, and it could have been stopped at any point if NATO wanted it stopped.
Yeah.
And they didn't want it stopped. And I think in the 3D chess model, I think we blew it badly. The 4D model says, 4D chess model is maybe we didn't. Maybe there's some other purpose to the whole damn thing that you can't fathom. I got to figure Ukraine-Russia is about us not only getting resources. I think we probably wanted to make sure that ExxonMobil, Rio Tinto and companies got in there and got everything out of there and as a resource grab. Certainly there was some salivating over that.
Could it be just a money laundering expedition?
Well, it certainly was that. I don't know if it was intended to be that, but it also could have been defensive to keep China from getting it. So we get it or they get it. We can't have them get it, so we get it. I'm almost sympathetic to that one, right? That one makes me feel a little better than us just getting it out of pure greed. That becomes a deep state. We can't tell you the truth, but here's the fucking problem we're facing. I don't think the neocons serve a purpose anymore. I think they're anachronistic and they're causing a lot of trouble. So I think we could be end of empire. It takes a long time. It's not like Rome. It's not like Thebes or Carthage or whatever. It can take a long time.
Yeah,
but Rome time. So it did. 476 is the year that gets assigned to it, but they still wore togas and shit.
Really? Yeah.
So then the question is where from here? I think our system is too corrupt.
Yeah.
So Trump's a start, but I fear that's just kind of, Lexington and Concord, but we've got a big war ahead of us. And it's not going to be pleasant for us if that's the case. We've got good resources, inland waterways, fairly educated, although less so masses. The students are not very good now.
Yeah. Maybe you shouldn't send your grandkids to college.
Well, and no, I think we could cut the number of colleges in half and gain. I think you keep the community colleges, you keep the elite colleges. That's not self-serving. I'm about to retire. I don't care. But I think you treat the elite colleges like magnet schools, right? So you make sure you teach them. You stop teaching them crap. But most of what's learned at Cornell is not crap. You read about a course on some gender studies thing that appalls you, but there are thousands of courses here. I guarantee you can go to any school and find a stupid fucking course. But you can also find kids making cars and robots and shit in the engineering school, and people in the business school learning how to destroy the system and things like that. So you keep those, and you got the middle. If you're a double 500 SAT, you should be studying a trade.
Absolutely. Or going bartending or something.
There are English majors that have verbal SATs in the 500s, right? And my verbal SAT wasn't great, but I'm not an English major either. So I wasn't an English major. So that there's a tremendous waste of money in college. Right up the lake, actually, a college went bankrupt. 1830, I think it started, and it's now bankrupt. Small college called Wells College. What do you do with it? Fascinating question. It might cost $1 million a year to keep the buildings from falling in, just keeping the heat on, and right?
Yes.
The maintenance to have it not become a Detroit ghetto. Where's that money come from? Who's going to be paying that bill?
Yeah, you. It's the
I don't know. I really don't know. What do you do with a college?
You demolish it and put in some cow pastures or something. We have a shortage.
Or you turn it into a trade school.
Turn it into trade school. That's a good answer. On the note, my daughters, both of them, I have 3 daughters. 2 of them are going into college.
May God have mercy on your soul.
And they're as pretty as their mother. And
let me ask you this question. The boys are harder young and the girls are harder older. Is that right?
I would say, yeah, I would say that's true. I think it's more of me caring. So I have a son who's...
Okay, here's a vivid image for you. I wrote this down. Talking about the damage being done by cell phones and stuff. And I said, imagine a 10-year-old boy with Ritalin coursing through his veins, which many of them have, sitting on Pornhub. What damage that's doing to their brain. The whole digital media is like putting them in front of a Vegas slot machine for 15 hours a day. If you've got listeners who have very young kids, listen to Jonathan Haidt's The Anxious Generation, because your kids are being destroyed. Their brains are being turned to mush. So imagine this kid. This is where I'm bringing it up for you. Doing this, they say, is he ever going to do his homework? Is he ever going to leave his room? Is he ever going to get a date? And the stats show those are terrible, terrible numbers.
Fair.
And in fact, teen pregnancies are way down because they're not getting laid now. But imagine you have a daughter, which I'm bringing up, who's going to be his date. And he's going to be beta testing his knowledge on your daughter. Did I just de-invite myself from our next podcast?
No, but I tell you what, it didn't make me feel uncomfortable. Going back to your question, my boys, I have a soon to be 21-year-old and then a 16-year-old boy. I am not different challenges, but I'm emotionally not as concerned about them the older they've gotten.
Well, because they've obviously gotten through some of the tough years.
And I'm just like, you're on your own now, son. Yeah, I'll help you. I'll buy you a car, but you're on your own.
You will discover that's never true.
I think you're probably right.
The Bank of Dad is a drive-through 24-hour window.
It is now. It is now. Hey, Dad.
You think it's going to stop.
Yeah.
I just spent over $100,000 on my younger son,
Yeah.
buying him a 1725 Carlo Antonio Testori Italian violin.
That's more than so. Your son's a violin player. I spent 10
He's
grand.
a violinist.
My daughter's a violinist. I spent 10 grand on her violin.
Well, he can get her a good violin when it's time to upgrade. What I'll tell you is it will be if she stays with it.
Well, on that story, we're going on a tangent here, but on that story, my daughter is auditioning for the Curtis for violin,
which is a conservatory.
a conservatory, one of the top in the U.S., and she's auditioning for a full ride at Emory here in Atlanta.
Oh, that would be good.
Yeah, and she wants to double major if she goes there, music and medicine, and I'm telling her not to major in medicine, even though that'd be a good outcome for your future. She just can't have a life.
I don't know. What I do think is that they should certainly use their electives to double majoring, by the way, is sometimes a bad idea. And the reason is because every major has bullshit in it.
Yeah.
So I was a bio major, genetics minor, emphasis, genetics concentration. And I ended up getting my PhD in organic chemistry. And the reason was because I used electives. I decided I liked organic chemistry, much to my shock. And I used electives to take courses in chemistry. And I was missing vast swaths, but I took the right courses. I went off to Columbia and was very successful at Columbia. The majors filled with courses, some are good and some are not so good. Double majoring, you find yourself pushing yourself to take crappy courses because you want the major.
Right.
And the major doesn't make you smarter. The major is something that's on a sheepskin that won't matter.
No,
So I would urge her not to double major, urge her to use her electives to study something else, whatever she wants to do.
Well, I think she wants to study medicine. She had a
Then-
healthcare problem that's been resolved, and lots of hospital visits, that sort of thing. This was within the past year, and everything's fine. She's fine. But that put in a love for medicine because we were discussing and researching what was going on in her body. And then she's like, hey, I think I want to do this. So
Okay, well, that sounds like good motivation.
yeah. Well, I've kept you too long. I think we'll end on that. I want to say highly enjoyable, David. Highly enjoyable.
I enjoy the chats, and the fact that people want to record them is okay.
Well, what's interesting with you is there's no way I can put your email in there. I don't know if you want me to do that. But
What I tell people is, look, you know where I am. You know my name. If you're not smart enough to figure out my email, I don't want to talk to you.
That's how you scream. Absolutely.
I'm screening for sub 80 IQ. Right. Don't send me long emails. I don't have time. I write a year in review that's 300 pages. Do not send me yours. It's a selfish stance, but some people really want to reach out and really just want to spill their guts, and you better bring your A game to keep my attention, because my inbox is all screwed up.
It is. I'll say that from history, but you've been very gracious to me and you're very responsive. So I want to tell you thank you. And I'll just leave it at that. If you're still listeners and viewers, this is going to get a ton of views. If you're still with us, that's how you get in touch with David.
I know I'm on Twitter, David B. Collum.
Oh, I will link that.
I do not need more followers. The more followers you have, the worse the experience it is. It might feel like it's going to be better, but it is not. There are advantages. It's kind of a LinkedIn for me, so I can reach people that I couldn't fathom. The other day, Dinesh D'Souza followed me. I'm going, why?
Right. Well, you have a lot of good things to say.
I guess. I don't know. I've been blocked by every Fauci acolyte. So I've been blocked by Daszak, Barrick, Hotez, and Anderson. And if you know and I've never said boo to them. So somehow they know that I would cap their ass if I ran into them. They know that I am not their friend. I'm just joking, for the record.
Well, David, thank you. I really appreciate it. And I'll put your Twitter handle in the show notes.
Send me a link too, since I lose track.
I will, absolutely. Thank you, David.
Thank you.
Have a good day.